All right, for those of you with indigestion from watching the markets bounce all over Thursday, Friday, and yesterday a bit of a reprieve, and today looks like it's going to be in the green, as we talked about. But Nick Hopwood leads a team of certified financial planners at Peak Wealth Management. You know, it's great to have a team of advisors working together to develop a plan for you. And one of his bits of advice is keep to the plan, stay the course. Do not panic. Do not hit the panic button. Nick, welcome back to the program. Nice to see you.
Steve, thanks for inviting me.
Now, you said Sunday was a bit of a tough night because you thought it was going to be down 5% 3 days in a row, but as it turns out, Monday, not too bad at all. What, down 300 points, something like that. Today, looking at the futures, 700, maybe 800 points on the plus side. Have things settled down maybe for a moment?
A little bit. You know, we have a little bit of optimistic action here in the markets, but I just, recommend that everyone take a deep breath. Trust the plan is my mantra in times like this. Trust the plan that the president has put together, and trust the financial plan that your advisor has put together. And if your advisor hasn't done a plan for you, then maybe look for a change. Look for somebody different.
All right, so let's talk about, you got some visuals here for the folks watching on streaming and watching on Real America's Voice and elsewhere. You've got some educational aids, as it were. So let's go through these.
Yeah, Steve, this chart is nothing new. We've all seen it before. And, I just want to bring it up because I think that this market action is not all about tariffs, even though that's the headline risk. It comes back to the fact that we've been running $2 trillion deficits while tax receipts are up. We really need to cut $1 trillion out of the government spending. And if we have a $30 trillion economy, $1 trillion is a 3% cut, and that's a recession. So, we want the government spending down, but, the hard medicine could be the recession, and the tariff is just, one of the symptoms that we're seeing right now.
Sure. I mean, look, during COVID, they were pumping in literally trillions of dollars being pumped into the economy globally. Here in America, in other countries, just pumping in, play money, monopoly money from all over, just pumping it in, pumping it in. Look, that was fantasy land. It wasn't real. It's time for an actual reset, isn't it?
Yeah, I think it is for sure. And this is that hard medicine. I think Trump knows that he has to do it immediately. And then we have a nice rebound into next year. And then, the election is in November and people have short memories. So if he has this max pain as early on as possible, the midterms can look good for him.
Well, absolutely. I mean, look, we talked about 1987 here in the break just before you came on. And you said a year later it was up 28%. If we're up 28% a year from now, Donald Trump will command the midterms, won't he?
Yeah, and Anthony, if we have that chart here, we can show here we go. This is a chart showing 2-day declines in the magnitude that we saw on Thursday and Friday. So we were minus 10% at the end of the week. We don't know what's going to happen 1 year from now, but each time we've had an event like this in 1987, 2008, and 2020, we had huge rebounds 1 year and beyond. And like you said, on Black Monday in 1987, plus 28% a year later.
Right. So, I mean, look, we've been through these things before. 2008 and 9 was terrible. 2020 and 2022 wasn't much of a year either, to be fair. Let's be honest with that. We got another chart here as well. Look, here's where people really make mistakes. I made this mistake once a long time, maybe about 2008 or 9. I got panicked and I said, put me on the sideline. And all of a sudden, everything came back in and everything went up, and I missed the upside, right? Happened.
Yeah, well, Steve, in 2008, you were a young whippersnapper, so you could have been thinking more opportunistically and adding more in, okay, because you didn't need the money for decades.
Correct.
But now, imagine if you're retired today, okay? For you, I don't know how far away that is, but imagine, 10 years from now, you're retired, and now we're relying on our portfolio for income. Well, as you can see on this chart, if we need income right now, we don't want to have any market risk. However, if we're looking at the part of the portfolio that we don't need for 10 or 20 years, like at the bottom of the chart, we can be more growth oriented. And that growth account is getting hit right now, but you don't need it for so long. It's okay.
So again, you come back to trust the plan.
Correct. And for all our retirees, this is the type of plan that we put together where the money that we need in the next 2 years is in the money market and treasury bills. The money that we need in 5 or 10 years can be more moderate risk. Beyond 10 years, we can be more growth oriented. Imagine you're walking through the forest and you see blue skies and everything's fine because your income is good. But, several miles down the road, you've got a raging forest fire going on. But by the time you get to that point in the forest, it'll be green shoots and blue skies again because that portfolio would have recovered.
Yeah, I mean, let's talk about a couple of the fundamentals here. Inflation now, from everything I can read and understand, less than 2%. We haven't seen that in a while. Hiring is on the rise, a bigger jobs number than expected. The price of oil is down. The price of gasoline is coming down. And therefore the price of a lot of things coming down. So there's no inflation, right? The energy's coming down, and therefore the price of groceries and so forth are coming down. So a lot of the fundamentals in the economy are good. So that leads me to ask the question, will the Fed reduce interest rates? Because if that happens, because you sent me a column yesterday, and I read about how the money on the sidelines wants to come back in badly. We've only got about a minute here, but it looks like there's enthusiasm to come back into the market. If the interest rates are dropped and gas is cheaper and oil's cheaper and energy's cheaper, that'd be a really good time to be in the market, wouldn't it?
It would, especially at these levels after we just wiped out a year of gains. There's no question inflation is going to come in at 0.1 for March. So inflation is coming down, and that gives the green light to the Fed. So Steve, coming into this year, we thought there might be 1 or 2 rate cuts. And now the updated expectations are 4 rate cuts between now and the end of the year. And we know that we want the Fed on our side, right? And so with the lower inflation, it gives them the green light.
Yeah.
So that's another positive for markets going forward.
You can find out more at peakwm.com. You can talk to my friend Nick over there, by the way. You can watch him on YouTube, too. Peak Wealth Management. You can find them, MGMT. PeakWM.com. Look it up. Get a second opinion. Stay the course. Keep the plan. Do not panic. Thank you, Nick. I think you helped some folks out today. Thank you so much.
Thank you, sir.
Really appreciate it. Look, again, we're going to watch the numbers here through the rest of the program, but they look pretty good right now. I'll be right back.